This is Shelley Craft coming to you live on SNNLive. We're at the Sprott Stansberry Vancouver Natural Resource Symposium 2015. With me is Mr. Pat Donnelly from First Mining Finance Corp. I'm going to give you some symbols. FF on the TSX Venture and FFMGF in the U.S. Pat, welcome to SNNLive.
Thanks for having me on, Shelley. I appreciate the time.
It's good to have you. Let's hear what you do.
Well, First Mining Finance, it's a new type of story. As everyone is probably well aware, we're probably in one of the worst bear markets with respect to mining equities I've ever seen, and I've been doing this for 20 years. And the business model is simply to go out and acquire some of these distressed junior mining companies to have really high quality assets. And there's dozens of companies that have over 1 million ounces of gold that are economic, but these companies have market caps below $10 million. So we're going to go out and accumulate these companies. We're going to take their assets, put them in our mineral bank, and we're going to hold on to them until these markets turn around. So I expect that'll take a couple of years. And I just want to mention also, this company was founded by Keith Neumeyer, who's, Keith has gone out and created $2 billion companies in First Quantum and First Majestic. When we're looking at assets, we look at size, grade, we're looking at jurisdiction. It has to be economic. Infrastructure is important. Political climate's important. So we have a pretty stringent set of criteria when we're looking at assets. Ultimately, the exit strategy is, in 2 years, 3 years, whatever it takes, we will sell these assets. We're not going to build them. We're not going to develop them. We're going to simply bank them. And when things do turn around, we'll sell these assets and we'll hold on to a minority interest, either through a royalty, a stream, equity, a spin out, or some sort of combination of all the above.
So here's my thinking. You're somewhere between a project generator and an investment banker. That's what I think.
Yeah, it's something like that. I mean, another term I've heard is we're like an ETF. We have a broad suite or a collection of high quality mineral assets. Our focus is on the Americas, Canada, United States, South America, exchange traded commodities, and focusing on stable jurisdictions. So yeah, I think that's a pretty good analogy, Shelley.
You're in a buyer's market. I mean, you're taking some people out of their misery, so to speak.
Well, it's interesting you say that. I mean, for example, a week ago when we saw gold drop below $1,100, my phone started ringing off the hook from some distressed junior mining companies who are now starting to pull their hair out, and they want to do something. I'm getting shareholders calling me up saying, you know what, these management teams aren't doing anything. They got no money. They're accruing salary. They got good assets. I don't know what to do. I believe in Keith. I believe in what you guys are doing. I'd rather you guys take our companies and do something with our asset. And so, again, it's just a tremendous opportunity to add value for our shareholders and other company shareholders.
How quick do you turn around on a buy?
Well, it depends. There's a process to that. You want to go out and we do quite a bit of due diligence. I have a couple of engineers. I'm a geologist. I'm a former analyst. So we put in quite a bit of due diligence when we're looking at these assets. And then you got to go and, go through the financials, the balance sheets. You don't want to get anything that has, any hidden skeletons in the closet. So there is a process. But, once things get going, it usually takes a number of weeks to do a deal.
Do you have any limitation on size?
No, not really. I mean, bigger is better, obviously. Size, like I said, the criteria would be you have to have at least 1 million ounces of gold equivalent. But in terms of upside, the bigger the better.
So accumulating is the name of your game at a low price in a market that's distressed.
It's a market that's in crisis, and it's interesting. You can go out and buy a good asset for less than $10 an ounce, and I used to be a geologist 20 years ago, and if you gave me $10 million, I'd go and drill you 1 million ounces. Nowadays, it's cheaper to buy $1 million than to drill $1 million, and that's how broken this market is.
That's a really interesting statement you just made. What do you see as the upside for the company, let's say, going forward into 2016?
Well, as Keith has said, we created this company not to make $100,000 and make $1 million. We created this company to make $1 billion. And if you look at Keith Neumeyer's track record, that's what he's done with First Majestic and First Quantum. So the upside's tremendous. And like I said, I think we still got a couple more years in this bear market, and we're going to take advantage of it. We're going to continue to add millions of ounces of gold to our portfolio. So, as long as this bear market goes on, we're going to continue to add value, and the sky's the limit.
So you know what's interesting also is as you take on these assets and you rid yourself of former management, you may also be losing the negative of why investors weren't interested in putting any more money in those deals. So now you just simply, you're almost cleaning the company by bringing the asset in, and that becomes a pure asset on your books.
Absolutely. I mean, as I've learned, the number one criteria investors should be looking at with junior mining companies is management. And some of these companies, they've gone as far as they can, and the management can't do any more. And investors want quality management, and they want to participate in something that has upside. And we have the people that can do that.
So Pat, look, you don't have endless pockets. How are you doing these deals? For cash, stock? What's the transaction? What's the nature of it?
Well, we use our shares. We have good liquidity. We have a fairly good share price, and I get that question all the time. Let me put it this way. If you're a shareholder and you paid, let's say, $1 per share, and now the share price is 2 cents, do you want to crystallize these massive losses, or do you want an opportunity to continue to participate in the upside of your project? And overwhelmingly, shareholders would rather take our shares than take cash. And again, it comes back to people having confidence in the management team and having confidence in Keith Neumeyer.
How do you handle the dilution side of it?
Well, let me put it this way. We can go out and for example, Coastal Gold, which is a company we just acquired, we took about 20% dilution. We paid about $11 an ounce. Well, in a normal market, it should be valued at $80, $90 an ounce. So, maybe you get 20% dilution on these things, but you're also increasing the value of your company by 7, 8, 9 times. So the value upside vastly exceeds any dilution that you take. It's all about adding value.
Ladies and gentlemen, let's get your website out there so we can drive some traffic to you.
Absolutely. www.firstminingfinance.com.
Pat Donnelly, ladies and gentlemen. First Mining Finance Corp, FF on the TSX Venture, FFMGF on the U.S. market. I'm Shelley Kraft. This is SNNLive, and we're coming to you live from the Sprott, Stansberry, Vancouver Natural Resource Symposium 2015. Pat, thanks for coming on. Good story.
Thanks a lot, Shelley. We appreciate it.
You're welcome.